Hello, Warriors. How's everyone doing today?
Morning, Dale.
Alexander. Hey, Ryan. Brock, how are you? Hugo. KMan's with us today.
He sure is.
Good
And
morning.
Ron. Good
Can
morning,
you hear me?
KMan. Yes, can hear you loud and clear. And
Oh, that's perfect. Thank you.
welcome to Face. Just want to take a quick look around. I'm going to bring you guys in. Okay. So I just want to touch on a couple of things. Yesterday, Ryan and I were talking about a potential turnaround Tuesday in EG. And Ryan, you're here. Looks like a hammer to me right here. Yesterday on Tuesday. To you too? A hammer?
Yeah,
What's
I'm happy that it held. I was trading the barrier down there,
yeah.
the long-standing barrier down there, and too good to refuse. So I jumped in long at 05, and yeah, complete turnaround.
Okay.
As you say.
Yeah. So we have a potential reversal week if we close over 84.33. And this is what I say about this candle right here. If I had a hammer, I'd hammer in the morning, I'd hammer in the evening, all over this land. I'd hammer out justice, I'd hammer out freedom, I'd hammer out love between my traders and my brothers, all over this land. So there's the hammer song. Steve Neeson doesn't have that in his book, so that's the only time you heard about a candlestick hammer musically. So anyway, I want to bring KMan in, and you know we're fortunate, everybody. The law of attraction continues to work at ForexAnalytix. That we keep attracting very talented experienced people that could help our subscribers become successful. So, K-Man, or if I want to use the name you said I could use, Conrad, welcome to the
You can
team.
use anything, but Cayman it will be the easiest.
Okay, K-Man, welcome to the team.
Thank you.
And K-Man's been a market maker for decades at different big banks. So that's, Celios did that as well. So we have a couple of market makers, former market makers that are trading and sharing their ideas and trying to help everyone that's part of the community at ForexAnalytix. So Ryan, maybe you want to take over, and or Blake, if you're here, and ask K-Man some questions about what his role is going to be, etc.
Yeah,
Hey,
sure.
good morning, guys. How are you?
Hey, Blake.
Hey, morning, Blake.
Hey, good morning. I'm sorry, I'm on right now. I've got some sounds going on by my head, which is Halloween stuff that's happening right outside my office, and I wish it wasn't happening right now, but it's in my. That's all I can hear right now. You guys can't hear it, fortunately, because I got a decent microphone. Anyway, K-Man, welcome to the team. It's really nice to have you.
Thank you very much. Glad to be here.
Yeah, it's great to have you here. And it's great. Like Dale was saying a little bit earlier, it's really good to have your experience. It's great to have your experience, I must say, in the ForexAnalytix community. We feel that we're blessed to have you, and I wanted to make sure, not just me, but the rest of the team, we want to make sure that we showcased you a little bit, because you've been with Ryan in the Forex Flow Live community for how long? Do you want to tell us a little bit about how you came across meeting Ryan over at Forex Flow? And Ryan, I know you're here too. I don't want to take up any more of the time or our time. I want you guys to kind of talk about how you met each other and how you got involved with Forex Flow, and then maybe how your experience have brought you here over the last 40 years in the markets.
Yeah, sure. So as you and Dale already mentioned, I've been in the market for August this year. It's been 40 years since I put my first foot into a bank dealing room. Spent a couple of years learning about economics, really. as I didn't know anything about it when I walked into that dealing room. I'm part of what they call the early 80s, the baby generation, where people got off out of, what is it, high school in America, secondary school in Europe, and yeah, basically we got dropped into dealing rooms and then got a space on a trading desk because we were fast and could absorb a lot of information at the same time. So after a couple of years learning tricks from and learning economics from really good mentors, real bankers those days, I got onto a SpotFX market making desk, and the rest is well, I probably made a market in most well, in all G11 currencies, and then a couple of others as well. Over the years, different ones. Did the ERM or EMS, was a really great period. And then since 1997, I started to market make dollar yen and yen pairs, and I've been doing that for 18 years.
Wow.
Ended up 5 years in Tokyo on my journey. And then since 2016, I've started to trade my own money. And I think I met Ryan first time must have been 2017 on an FX venue. And yeah, it clicked pretty much straight away. Ryan had some really good ideas about what to do and what to set up. So I decided to join him and for the ride, and we are still riding.
Yeah,
That's awesome. Well, you've been a staple around his platform and his group for I guess since 2017, and I started following you on social media just because I knew even before Ryan and Forex Flow and ForexAnalytix had talked about, joining forces, if you will. I could tell early on that you were, a key component over there in the ecosystem of Forex Flow Live. And I've had the pleasure of actually following you for the last couple of years on social media. And I've always found your knowledge to be of such great value. I told way before Ryan and I even started talking, this is, I'm going back, during the, let's say, Trump administration years, when I started actually setting up alerts on my phone to be notified when certain Twitter handles would send out, tweets, because it was so important. You guys have always been on top of everything that's breaking. And I used to follow the Forex Flow Live Twitter handle because I knew you and Ryan both combined were putting out some very pertinent and timely information. So and so I've always had a great respect of what you've done. So Ryan, tell me what it's been like being with we'll just call KMan, being with KMan the last few years, and having his knowledge around the Forex Flow community, because Ryan and I both are exactly the same age. We've been in the business pretty much the same amount of time. So when you have somebody like KMan that's been on trade desks for 40 years, basically, which, by the way, I have to say, if you're in the business for 40 years, in the FX business, working for the caliber of banks you've been working for the last 40 years, you are doing something right. So what's it like working with KMan, Ryan?
it's tough, mate. He's Belgium, I'm English, and we've had some football tournaments recently, and that's made it very tough. But jokes aside, it's always good to be surrounded by people of experience like Kay. Coming out the city myself, we tend to have the same thought processes, and Kay's second to none, and especially on things like Japan. He lived it. You always listen to people who have been on the ground, who know what they're talking about. We think we know about different countries, Japan. I think I know something about America, but unless you're there living it day to day, you don't get that feeling for it. So when you got someone of Kay's experience who's been there, seen it, done it, and taught me so much about what goes on in Japan. You think you know something, and you don't know anything at all. But just having the overall experience, we've been lucky to have been on both sides of the market. We've been on the institutional side and we've been on the retail side. But they're chalk and cheese. Pretty much everything you might know or think being on the institutional side does not set you up for going and trading your own money. It's completely different psychology, processes. The whole thing is different. Yeah. But you build that experience into what you do as a retail trader. And Kay's done that marvelously well. I watch him trade, and he's in and out and crossing through this pair, that pair, the other pair, and he's got a grasp of it. In specifically in some of the pairs that some people don't often trade. Some of the EMs. He'll flip in and out of Euromex like you do, and CAD yen, CAD Aussie, whatever. And it's good to watch, and it helps me as a trader, and more specifically, I think it helps other traders in our trading room and in the chat rooms, because you get that level of expertise that is hard to come by these days.
Sure is. And so, KMan, I want to ask you just a few things actually before I get your take on some things in the market here, because we do have the Bank of Canada coming up today. Actually, Brazil set to raise rates today as well. So we have some central bank activity, obviously, and then tomorrow we have the European Central Bank, which, by the way, an interview with Ryan Littlestone is coming out on Trader Summit today. Ryan and I talked about the ECB that's happening tomorrow, but I'd love to hear your take. We also have some viewers wanting to know how you feel about the yen, because you and I have had separate conversations about the yen and what's happening in Japan, happening with the yen. And by the way, I think that the knowledge that you bring working on yen desks for so many years, living in Japan for 5 years, understanding the flows that come through the yen, I think is important for people to hear. So we'd love to get your input regarding those things. Again, let's start off with the yen and these massive moves that we've seen over the course of the last, couple weeks. I look at everything as bull flagging now. You can see all my charts that really suggest that we have some bull flags developing, which is, just some bullish consolidations. I could leave the Canadian yen here since we have the BOC today, but what are your thoughts on the yen and the recent move that we've seen?
Yeah. Okay, so as the people at ForexAnalytix may know, I was long dollar yen just around or a fraction below 110 for October, for the start of October. So this thing happening because the one thing was that equities wouldn't go down. Second thing was that energy prices were shooting up. And as we know, Japan, or as we should know, for people wanting to trade yen, Japan is a huge energy importer. And the other thing that was happening at the same time is that the US rates were pulling higher, and that take away the day-to-day pips trading is the perfect cocktail for a weaker yen. And then just yesterday and a couple of days ago, before as well, we saw a few of the Japanese asset managers and coming out saying that they would like to increase their unhedged foreign bond portfolios. And as we know, Japan is one of the, if not the biggest investor in US bonds. So when they remain hedged, when periods are uncertain or where the rates are really staying low, and the hedging costs are very low. So the only thing they do is place their bonds, but then they hedge their bonds. But coming out and saying that they want to remain unhedged, that means that in simple terms, they are just going to buy dollar yen and buy Aussie yen and buy Canada yen in different periods, different sizes and things, but it just tells the market that they remain unhedged. Now, the finality we never know. I mean, that's what markets are for. They are buyers and sellers. But what we do know is that if those people continue over the next, let's say, couple of months, they were talking about second half of their fiscal year, but I would say like October, November, December to start with. If they continue to do that, apart from like we saw this morning, very fast setbacks when people take profits on global yen pairs. We might expect them to be on the bid, and therefore it's interesting as well to have a look at what dollar yen, Aussie yen for sure, because those are the two main investment instruments of Japanese money managers, what they are doing to their own currency and to those pairs. So in my opinion, this run is not over yet. I'd say also that we have escaped this attraction sphere of the 110 in dollar yen by breaking above 112, 112 and a half. And I'd say that if we go anywhere close to 112, 112 and a half for the medium term, that we are going to find a lot of buyers in dollar yen.
Now, it's interesting you say that. I was just looking at the technicals here. We do have a very minor intraday head and shoulder pattern. If we start breaking below like 113.50, that would really put a target in around just call it like 112, but somewhere around the 112 and at 112 and a quarter, somewhere in this neighborhood. And so going along with what you're saying, it seems like we're in a new range now. Like you pointed out, we're outside of that 110 band, 110 to 110 to 111 band, and we've moved out of that. And so we're like in a new level higher between 112 and 115, right?
Yeah, look at what we did like the months prior, that range. Yeah. Look at what we did, 109, 108 and a half, then you move up to 111. So everything was going in medium term terms, everything was going on around 110. And it seems that now we have escaped this influence, this attraction level. And in my opinion, it's going to continue now, unless the Fed changes dramatically next week. I don't think that BOJ upcoming is going to do a lot. We can't forget that we have the Japanese elections coming up as well this weekend. Usually,
that's a big.
Don't move ahead of elections. Kuroda being who he is, he will probably not move a lot. So I heard people talk about cutting back on emergency stimulus. They actually already cut back in the prior months. They gradually bought less and less JGBs, but when was it? A week or a week and a half ago, they came up with their fourth quarter of 2021 planned JGB buying, and they left everything unchanged. So I don't put a gun to my head. I don't think that BOJ is going to do anything coming night.
So do you think that?
Go ahead, Ryan.
Do you think that perhaps we're seeing just for now, we're going to see a pause in this potential yen selling because we've got these big central bank meetings. We've also got end of month, this week. Yeah. And perhaps after the Fed, that's when we're next going to see maybe the next leg up.
Exactly. I mean, depending what FOMC says. Okay, so we've seen and we've talked about it in the chat room, and I've put something on there already end of last week. There should be dollar sellers around for the end of the month, and the biggest signal is in dollar yen actually, because Nikkei has been a big laggard this month compared to US markets. So there is a chance that towards the end of this week, we might actually go and see those 112, 112 and a half levels. I say there is a chance. Not saying they will, there is a chance. And then it will be up to FOMC, what FOMC is up to, if they go linear, soft, or a hard taper.
So KMan, they're talking about what, reducing their the taper at about 15 billion. Is that what the market's looking for?
The FOMC?
Huh?
The
That's
FOMC, you mean?
for the FOMC, yeah.
Yeah. So I think the of what Powell was saying earlier in the year, the market might have been thinking about 10 billion, but then since all Fed speakers have been saying that they would like to end for mid 2022, if they start to taper November, that's 8 months, and 8 months a linear taper is 15 billion a month, right? So I think depending on what they come up with, it's that is going to have a big impact on the yen as well.
What if they go 20?
If they do 20, I think we might have a setback in risk for the time being, especially like the fragile risk currencies like EM. Yen may benefit, but not through dollar yen, I think, as much as through cross yen. If they cut back more, because they take dollars out of the market, people are so as how I say, complacent about QE into eternity, that we might have a setback in risk, stocks maybe a little bit lower on the back of it. That would be my first reaction or impression or idea about what might happen. If they go linear, I think we take the same as what we are doing now, and we continue. If they go soft, that is probably going to see interest rates maybe drop back a little, and then but on the other hand, it's gonna drive stocks even higher, and so risk pairs should go even higher. They should explode, actually, I think.
So KMan, I want to ask, this is like the burning question that every trader asks all the time, and taking somebody like yourself that was on in Japan, boots on the ground, working. What bank were you at that time?
I was working for the biggest French bank at the time.
Oh, okay. I'm not gonna say their name, but the banks that you've been at are top tier, desks that in the industry. So if you guys think of whether it's, I'm not going to name off a bunch of banks. But you guys
Barclays just named those two because those were a little bit before.
Okay. All right. There we go. So but being on, the desks in Japan, what drives, this is a question everybody asks, what drives people to the yen when there's risk off sentiment? So when you see stocks coming down and people say, oh crap, I need to buy dollars, and you know what, I'm going to start buying yen. What is it about the yen that attracts so many investors? I mean, I think I know the answer. I'm not going to say it. I'm going to let you talk about it. But what drives investors to the yen, even over the dollar, in periods of high risk aversion? What do you say?
Well, first of all, the Japanese debt is held by themselves.
Yeah.
And that's probably the major reason. Or also, there's a kind of a natural reaction when you go like yen being like an ultra low yielder all the time.
Funding currency, right?
Yeah, funding currency, exactly. And so what people say, if you go risk off, is it really yen buying as to go long yen? Yes, players do it. But the people who are in natural trades, like Japanese accounts, for instance, what they do is it's actually a form of a repatriation,
right,
of risk assets that they have outside.
It'd be kind of the same thing as like if I'm an investor and I'm like, oh, stocks are going higher. I take my dollars and I deploy them into Tesla, and I buy Tesla stock, and all of a sudden I feel, oh, the stock market's going to come down. I'm going to sell my Tesla stock and put it back into dollars. So you're just talking about repatriating back into yen, right?
It's that kind of thing. I think the market looks at risk off and risk on, and buying yen and or buying and selling yen or buying and selling Swiss. I think they take it from the wrong way around. It's like, okay, we speculators, the speculators will buy yen because they're probably not short yen, but still they will probably be in a positive market or in a risk on market. They will probably be short a little bit of yen. So a lot of those reactions are actually, a lot of those moves are actually reactions instead of actions. You know, do you understand what I mean? It's like Japanese accounts start to react. They have to take off investments because if risk goes off, they risk to lose money. You know what I mean? And so they buy back yen. It's more that kind of move. But okay, in reality, it's the same, of course. So that's where I'm just trying to explain where this correlation between risk on and risk off and yen up and yen down comes from.
Okay, KMan, can I ask you this? We all know there's a very tight correlation with yields. What do you think about the correlation with the movement of yen with precious metals?
There we go. I was hoping you not to ask me that one because I think
then it was a good question.
Good. I was just gonna say, great one, Dale. That was a good one.
Yeah, because it's actually
it links and delinks all the time.
It's been waning, right? It comes on and off historically quite a lot. If you look at, for instance, where was it? 2012 or so, gold was like, wasn't it then hovering around its lows, and yen was hovering around its highs? I mean, where is the correlation, right?
Yeah.
Yeah, I think they have this sort of correlation, but I prefer not to comment too much on it because I don't fully agree on it.
You know, and there's you know what, there's nothing wrong with that. But Dale, that was a good question. I was like, ooh, okay. So, and by the way, just so you guys can see on your screen, this is gold. This is gold here, and this is the yen futures. So, you know, yen, the contract 6J, if you will. So this is, you can see how tight that correlation's been over the years, and it is interesting how, you know, you do have those very strong correlations between yields, yen, and whatnot. Okay, so one last thing.
I think the main correlation there is ultra low yielders.
Yeah, right. And so then if you throw yields on there, then you got something else. So now I'm gonna ask one last thing. You know, Ryan had because Dale, you have Harold Malmgren coming in. Really is going to be a really great interview coming up. But I wanted to ask Ryan, any last thoughts with the Bank of Canada today? You know, the BOC is a little bit of a, I want to say, a little bit of a mystery to traders. We technically we're looking, and we've been talking about the 124.20 levels being really key resistance, previous support, acting as current resistance, nice little rounded bottom. This has been our chart for the last, several days. If you've been listening to the only ForexAnalytix clients, Morning Edge and Daily Roundup and European Crossover, those are the webinars that are available to you guys that are only ForexAnalytix traders. But this morning, we just knocked our head right up against 124.25, rejected it. BOCs today, are they going to lean more dovish, or are they going to start joining the hawkish camp? And what are your thoughts there?
I think, as mentioned, there's a risk that they're a bit more hawkish than the market's expecting right now. I'm not positioned, but if we get some of that, then we're going to see dollar CAD, heading well under 123. My big thing I'm watching today, as I put a post up in the room as we spoke about, is that if they comment on this potential slowdown into the year end and how they're going to deal with that in terms of monetary policy, i.e. ignore it, or they're going to change tack and not taper or hike as fast as expected, that's going to be the big news, and that I think is going to reverberate across all the central banks.
All right. Well, thank you very much, Ryan. KMan, do you have any last thoughts here on the BOC?
Yeah, I think BOC has the potential of being the biggest central bank mover of the whole lot. Because yes, they can give some indications of how McClem is thinking about what the market is pricing in. I do think they have a golden opportunity to stop tapering today and to move into the reinvestment of the proceeds, which doesn't mean a very big difference, but it's going to be a psychological difference for the market if they stop tapering all in. But they have a golden opportunity to do it. The data were pretty good. Unemployment is back to pre-pandemic levels. They could be one of the first central banks, together with the Kiwis, to move out of the whole thing. So yes, there is a potential of being a very big mover today.
Awesome. Well, thank you very much for your input. And by the way, you guys want to see like, some of KMan's work, like this is, him and I, we discussed like the RAND quite a bit. And he was, mentioning to me earlier about, these are my thoughts on the RAND. And as we completed the inverted head and shoulder pattern, he knows I've been playing it on the long side. Him and I play a lot of the same currencies together. We like those higher volatility EM currencies. He's always in the Forex flow room, chatting around with all the guys there, with Ryan and, all the guys that came over from the Forex flow community, always posting news and research in the news and research tab, always in the trade room, posting trades. You can see him right here. So KMan, it's really nice to have you part of the ForexAnalytix family. That's our chat rooms right there. And really great to have you on here. This may be the first time we have you on ForexAnalytix, the face webinar. It will not be the last. We plan on having, KMan being more integral into the ForexAnalytix fabric, woven in a little bit more. So it's really nice to have you part of the team, and really appreciate you being here today and sharing your knowledge with the rest of the ForexAnalytix family. So cheers to you.
Thank you very much, Blake, and everybody. I'm really happy to be part of it.
Really nice to have you here. And thank God Ryan brought you over. So Ryan, thank you for that. And by the way, for those of you that are, I know I said it, I'm going to say it one last time. There's an interview coming out on Traders Summit with Ryan's views on the European Central Bank tomorrow. And we take a look at the euro and the euro sterling. Not going to give away too much of the interview, but make sure you guys find that on Traders Summit. So you'll see it right here on the Traders Summit site. So make sure you're following them on Twitter. And that's it. Dale, have a great interview with Mr. Malmgren. His daughter. Well, you should ask him who his daughter is. One of the guys that I used to trade with over at FX Macro. He's a big fan of Harold. I'm sorry, Pippa, that's right. And so so it's going to be it'll be an interesting interview as always. I'm gonna shut up now and tune in. So you guys have a great one. Good luck today.
Thank you, you too, Blake, and the rest of the team. And Harold, welcome back. We have some people that already want to ask some questions of you, so I'm going to ask you to unmute at this time, Harold. And from my memory, I believe that I share the screen. Harold, welcome back to Face.
Oh, I'm happy to be here with you.
Yeah, great to have you. So
you mentioned,
go ahead.
You just mentioned Pippa, my daughter. Yeah. She's off, in her own trajectory, with somewhat different background. Spent a lot of time in currency trading, in banking, but we talk back and forth. It's a father-daughter thing. You would be amazed that we differ on many things. We come out the same on other things. Very stimulating. And recently, to my surprise, several universities around the world have asked if we could do a joint lecture series.
Oh, that'd be fun, huh?
Yeah, and the one that hit me, just out of the blue was Texas A&M, and we
The
said
Aggies.
we said we'd do it, but couldn't do it during football season so we can watch a game. But they said no, we'd have to do it in the spring anyway. Um,
Yeah.
we tend to stimulate each other, and as you know, I don't try to pick stocks or the next move
Yeah.
for trading, and so we won't talk about that today. But
Okay. Well, I didn't know this, but we also have a pretty sophisticated audience, and someone wanted me to ask you about your influence on the Plaza Accord.
Yes, well, I was out of government at that time, but intimately involved for the reason that I was very close personally with the Japanese Prime Minister, Takeshita, and
Right.
and the finance ministry. So, and they played a very large balancing role at that moment. Um, so and Jim Baker dominating
Yeah.
with his aide Richard Darman. Um, no one could get to them except at the highest level, and I had many people asking me to intermediate between the Japanese Prime Minister and the Finance Ministry with um, Baker, and Baker's right-hand man was on the phone with me constantly because I was able to guide the Japanese responses. So,
Okay.
so anyway, it's a long story. One
It's an
day I'll write
interesting
about it.
story. Let me ask you this, Harold. Do you think that Jim Baker was really the president when he was Secretary
Yes,
of State?
yeah. When he was chief of staff for Reagan, he was the president, and then when he
Yeah.
moved to Treasury, he was still the president, and then when he moved to state, he just brought the world into his realm. But
Yeah.
he sort of became king of the world.
Yeah. That's the way it appeared to me back then. And when, I didn't know anything. I still don't know much, Harold, but I'd like to know and learn from you. What's on your radar? I remember last time we talked, we were actually addressing the fiscal stimulus package. Would they be able to get it done? And I don't know. At that time, we knew it was going to be the Democrats that were going to be the problem and holding together the coalition. And you thought that they might engineer a possibly a stock market decline to create some urgency for them to pass something. What do you think is going to happen now? Is it they going to get something skinny here or nothing at all?
Um, Something skinny.
Okay. How
They're
skinny? Under
yeah,
three total
yes,
for both?
under three. Yes, no, with both it'll be more like 2.5. But with the infrastructure
Okay.
and it'll be something close to what Manchin, the senator from West Virginia, wants. Um, and but it's not smooth. I mean, it's not clear. Pelosi has control of the House Democrats. They're deeply divided, and
Right.
then the Senate. We have two
Right.
Democratic senators on their own agenda, so it's very messy. What I'd like to talk about is a simple thing that I've been thinking about. We have all this excitement now about um, what will happen politically in terms of stimulus, and then when will this pandemic end, and how will that recovery take place? And then we have another overlay of supply chain breakdowns
Yeah.
worldwide. And how does this all fit together? And I wrote a note to myself, too many moving parts. We've never had so many
Yeah.
different things in motion all at once.
Yeah, it's like a juggler normally juggles 3 balls, and it's like, 12.
Yeah, yeah. And it reminded me of Lyndon Johnson in a meeting I was sitting in when someone was complaining about too many issues at once. And he said, if you want to live in the world of power, you have to be able to juggle many balls in the air at the same time without losing your own.
That's a great one. So I was around, you were around, everyone drawing parallels with what we're seeing now with the 70s, but the 70s, it really wasn't any supply chain issues.
Right.
It was more about, wasn't it more about currency debasement and
Yes.
people just wanting to own intrinsic value than
Yeah.
what's happening
Yes.
today?
Yes. Yeah, we're far away from there. And I was listening to myself. We've got an underlying industrial cycle that everybody seems to have forgotten. In the second half of
Well, because of the
2009,
Fed.
it's but it's in the end of
Every
2009.
cycle.
Yes, every cycle, but the Fed has been trying to prevent the
Right.
downside of every cycle. I mean, so it's become confusing.
Right.
But end of 2019, everybody's forgotten. We were, the IMF said flatly, we were entering synchronized global industrial contraction. And then, the pandemic came along and everybody forgot about that. I call everybody's attention to the figures yesterday from South Korea. South Korea's GDP growth for the third quarter is now expected to be 0.3% growth rate. That's like almost no growth. And why is that important? It's a canary in the mine shaft kind of thing. They're among the 4 biggest export-dependent economies in the world. And quite obviously, what's happening is the orders for manufacturers have really trailed off. So it's arguing that world industry is slowing down. And let's just not forget that, because Japan, Germany, China, South Korea, they are the most export dependent economies, and they're all going to suffer lower demand for manufacturers. It's part of it is obvious, it's automotive, but a big change. I think we're entering a major slowdown in this last half of this year. So that's one big cycle that's overlaid on all this other stuff. And it shouldn't be forgotten because it affects capital spending. Now we've got,
okay, well, all right. I just want to stop you there. So if we're going to have that kind of economic weakness, and we're already in the middle of it, and the Fed is shifting. I'm not saying they're tightening, but they're going to stop. I think they could stop buying MBSs. I don't think the real estate market needs much support when people get in line with bags of cash to pay over the listing price. So, so if that kind of could, and I've talked to others, they're a little concerned about that. Instead of being expansionary when we're going into this slowdown, that the Fed for the first time will not be, pushing back on that weakness, that they're actually going to, even though they may not raise rates for a while, they're kind of joining in the downside momentum by not giving as much support through QE. Does that worry you too?
It does. Their thinking always runs about 6 to 9 months late. So, I mean, I've been watching Fed for decades, and they're always, they're always right, but way too late. So,
except with their own money. I never knew. I never knew that the Fed, governors and chairmen were such great traders.
look, that there's a scandal there. I knew well Volcker, I mean, really well, and
Yeah,
Alan Greenspan. I sat many times with them when they would moan that they had put all their money, all their assets
right.
into the shortest
T-bills.
maturity T-bills.
Yeah,
And they said nobody at the Fed should ever own anything tradable. They shouldn't own stocks, commodities, they even real estate. They should be take care of because they'd be biased. And now
yeah.
we come along and we see everybody's in the game. I mean, it's like, it's appalling.
It's
And
a
it's
charade.
yeah, and all of these governors who are trading, they already have money. They don't really need to skim in the job. I mean, they could just wait a little bit till they got back out. Um,
There are a
Powell,
lot of people that have been talking about abolishing the Fed for a long time. You think that'll ever happen? Or are they too
no,
powerful? They're too powerful, aren't they?
yeah, and yeah, they're an extension. I put it crudely of Goldman Sachs. There's too
Yeah,
much money involved, but there is an issue of whether uh, they should keep their regulatory role, or whether that should be taken away from them, the New York Fed and the regulatory side, and merge with the FDIC. That I think is a possibility in the next few years.
okay.
Just leave them with the money, but get out, because they failed completely to address the banking regulation when we had the the Lehman crisis and the great financial crisis. I mean, they moved on QE, but they literally did a terrible job on cleaning up the banks.
Yeah. So, but everyone thinks, our banks are okay now, Harold, that
Yeah, I know.
except maybe Sheila Bair came out the other day and said she's worried about the Fed if they move too quickly.
Yeah,
Um,
well, I think she's one of the best people around, and I agree with that.
okay. All right. Why don't we get back to supply chain issues?
Yeah. So
President Biden's attempt to rectify it by just extending hours at the ports. Why are you laughing, buddy? All right. So, all right. I'm President Biden. Tell me how to fix the supply chain issues, please, Harold, before the midterms. Help me.
yeah, well, can't be done before the midterms. It's going to take 2 or 3 years, and
Oh,
so we're going to.
that's not good news, Harold.
No.
What am I?
Second thing, the only way you can deal with this, because it involves maritime management, it involves port management, which is usually local, um, the railroad management, the trucker problem.
Yeah.
We need a Secretary of Transportation. There's one there, but no one remembers his name because he's on leave.
Yeah,
Family
Pete
leave.
Buttigieg, I believe.
Yeah, I know. I mean,
Yeah,
I
yeah,
don't
I know.
remember people who don't matter.
Yeah.
But but
All right.
but the thing is, you need somebody. The president just appointed a maritime administrator, and it turns out it's somebody who knows nothing about port management or merchant carriers.
Yeah.
I mean, there's nobody there around the president who understands the complexity.
Yeah.
So, it's not just a matter of fixing the trucker situation or the hours of opening of any port. It's the loading, unloading. Where do you put the the big containers? Local rules against, you can't pile them up more than 2 high when they need to pile them up about 10 high.
Yeah. Someone told me they saw a news report about some of these containers during the storm falling off the ships.
Yep. There's
And
some
just,
nice photos of
they're
that.
very
Yeah.
toxic, just floating around in the ocean right now.
Yep. Yeah.
And
There
our
was some
Christmas.
great.
Okay, here's the most important question I had for you today. Since we're in this energy crunch,
Yeah.
what will Santa Claus substitute for coal to put in bad little boy and bad little girl stockings?
Yeah, well, there's a shortage of coal. There isn't
Natural
enough to
gas,
go.
or that's more. What's he going to do? So,
Well, that's a political decision. But we should be using much more natural gas because it's cheap. Was cheap,
yeah,
but now when Biden came in, he started putting lid not only on coal but
yeah,
on pipelines for gas, refineries, drilling. I mean, he's made the situation much worse. So the part of the escalation of price is OPEC, but a large part of it is moving on getting rid of fossil fuels too fast before
right.
before we're ready with renewables, and we won't be ready for renewables for several more years, because the big thing we need to do is build more nuclear power plants.
Oh
Uh,
yeah, the uranium market. In fact, your friend Tracy
yeah, I heard it
made her
yesterday. Yeah,
first foray into a uranium issue.
yeah.
Talked about it this week.
I think you're spot on. I listened to her yesterday. Yeah.
Okay, yeah. So
Um,
you know, a lot of people, it's green as long as there's not a meltdown, right?
yes.
Carbon footprint from nuclear is pretty low or zero.
Yeah. The leading expert in the Department of Energy is a friend of mine. I've reviewed it in depth with him, and he said, "Look, we burn almost all the fuel now. There's very little waste. The plants have become far more efficient.
Okay,
So the waste problem is no longer a problem. And we also know how to make small reactors, big reactors. We can even make reactors that we can drop from the air to take care of Marines established, deployed in northern Norway that will take care of power needs for them for 5 years. Um, I mean, in other words,
that's
if you're
amazing.
talking about a tiny module they can drop from the air, and it runs 5 years or more. I mean, they make them big and they make them small.
I'd
And
like a small one. I'm in California, tired of brownouts.
yeah, absolutely. Local governments should be really all in and developing these smaller units to back up the systems. Um,
Okay,
so so that's in motion, and
okay.
it's just the fear, the public fear of, oh gosh, waste. That's history. By the way, we can make these smaller reactors by 3D printing,
Oh
and
wow, yeah.
yeah,
So after
um,
they get through with my kidney, they could print
yeah,
out a nuclear reactor.
y- yeah. We thought 3D printing would be body parts
Yeah,
and toys, and
it's
now
amazing. Yeah,
um, they're doing all kinds of things. But I tell you what at the heart is new, not only new materials, but we can make a 3D printer roughly 12 feet high. So they can they can build residential complexes with 3D printing now, and they are doing that in Texas.
got a brave new world, Harold.
Entirely
You know,
different.
yeah,
Okay, but now let's take that and think about supply chains. We're not going to just reverse the supply chains or just move them from point A to point B. We are going to change the supply chains. A lot of things are going to be made locally,
yeah.
shorter supply chains. We're going to move earth like iron ore much less because we're going to use new materials that are stronger than steel, and we can develop them locally. We don't need to dig up the earth. The non-renewables are going to decline in demand slowly. So all of this is
Like
wrapped
copper,
up.
you're talking about?
Copper may be the one exception because it's so critical for moving
Okay,
electrical energy around. So
okay.
that one may um, remain stronger, but a lot of the basics are demand is going to decrease. So
Okay.
So
All right.
now there's one other element. There's this BS argument about offshoring. Everything went away during the 80s and 90s. While everything, a lot of companies were going to China, but during that time, everybody's forgotten who moved to the U.S. was Toyota, leading other Japanese manufacturers to a major position inside the U.S. market. We had reshoring or inshoring, whatever you want to call it, going on in parallel with outshoring. And now we've got, I think I mentioned this with you before, the German automakers wanting to copy what the Japanese did and move a lot of what they do in Dusseldorf and do it in Alabama.
Why?
So, well, because in Germany, the economic outlook is heavy. You got labor on the boards. The taxes are going to rise. It's not, Germany's outlook is grim. And coming to Alabama, all the German executives are thinking we can do what Toyota did and be successful. We can use that as an export platform for supplying Latin America and even China from the U.S. And we can also play golf. We have outdoors, and
Sure.
Germany is not going to be a good place to live.
Okay. So, still more constructive, the U.S., despite all our problems compared to Europe.
I think relative to Europe and China is in trouble. Europe's in really big trouble, especially Western Europe. And the U.S. may have a slowdown, but we're going to be the least ugly. We'll get preference, and the dollar will get preference because everything else looks so bad in the next 2 or 3 years. And this process.
Okay, so you're not a dollar bear. I mean, there are a lot of dollar bears out there that say, that's one tool to, do you think that and there are people saying the dollar could really explode, that milkshake theory because of emerging market debt? Which way do you fall down on this?
Well, I've been at the beginning of this year. I was asked where would the dollar be at the end, and I said dollar would be higher. And many people thought I was a little bit, off.
Great call.
But that to me was clear. If you ask me at the end of next year, a dollar will be higher than it is now. It's a slow process. It's not going to happen, suddenly.
Okay.
But dollar will look less ugly, but it has one other element that everybody's overlooking. The euro dollar market, that is the borrowing and lending outside the control of the US and the British, is huge. And all of that lending is collateral-based lending, and the collateral base is dollar instruments, dollar securities. And the leverage of borrowing is huge. It's not, 1.5 to 1 or 2 to 1. It's probably 10 to 1.
Okay.
So
they would want a weaker dollar, wouldn't they? Easier to service the debt. So the worst case scenario is a stronger dollar.
Well, they can't. They can sell every dollar asset they have, but it won't be enough. So there'll be huge demand for dollar assets in the next 2 or 3 years. And that tells you something about the bond outlook too. Yields can go up for now, but there's going to be a shortage of liquid dollars out there. And it's going to be, and if we have a slowdown.
Sounds deflationary to me, Harold.
Yes, I believe that we have stagflation sort of now, but we've got deflation coming.
Okay, I want to wrap it with the last question. Do you think that our Congress is dysfunctional enough for us to have our first default in early December?
No,
they'll just do the
they'll
dance.
Do some kind of shuffle, or they'll redefine what the limit is. It's anyway, it's theoretical that we have a limit.
Yeah, it is. They may try and just get rid of it.
Yeah.
Yeah.
Where we are now, think about this horrific outlook that I see politically. We have very strong likelihood that the country is swinging a little bit slowly towards Republicans.
Yeah.
So in 2022, we're going to have Republicans dominating the House, maybe even the Senate, but certainly the House. So we're
So
going to
he's
have
Jim. Some people are calling President Biden Jimmy Biden. So
Yeah.
he's going to be a lame duck 2 years into his first term.
Yes.
And
Yes.
so what
And-
happens is that good for America? You can't do any
No,
more damage.
Well,
Or-
no more damage, but we're going to be frozen in what we're doing about
yeah.
climate change, doing all the wrong things, moving ahead, we're getting rid of fossil fuel, but not replacing it with anything new. It's going to be, an unhappy, prolonged period.
Are our shelves going to be empty at the grocery stores? I can't find some of my favorite food items even at Walmart now.
Let me separate food from everything else. Right now, Costco can't even find toilet paper to be. Well, they warned about it. It'll be different shortages at different times depending on where the cycle is.
I heard the DEA made a big bust. They found 100 semiconductors buried in a kilo of cocaine.
Yeah.
That's a big bust for them.
I don't know if it's true, but it's plausible.
Well, we've run out of time. I could talk to you for hours, Harold.
Just let me remind up one thing.
Okay,
Food,
go ahead.
we got problems with food several times. One is droughts in some countries, flooding. There's a shortage of food out there, and we have one thing nobody's thinking about. It's the solar cycle. We are started a downturn at least 11 years in global cooling, and it's going to affect crops. So we're going to have tight food conditions for a decade ahead.
I never would have thought that you would have brought up the solar cycle and the inactivity. There are some people talking about the potential of a mini ice age. Wouldn't that be ironic in the middle of people worried about global warming?
Yeah, well, yes, but I myself have been talking about this now for 2 years, that this is
okay.
This looks not speculative. It looks to me a certainty.
So you think we will have a mini ice age, like they had? Just colder.
The mini ice age. We're expecting a traditional solar cycle of 11 years down and 11 years back up. But no one knows if it might be a longer one. If it's a longer one, it's going to be really bad for Northern Europe, Canada, China. So that nobody's paying attention to it, but it's real. And the average temperatures in Antarctica in the last 6 months are the lowest ever recorded. So
no one talks about that.
No. So just everybody think about that. Food is going to be expensive far into the future. It's going to create lots of problems with low-income workers who won't be able to, a lot of unrest.
All right, Harold. A real interesting way to end it with a climate forecast from you. And thank you so much for your giving spirit and sharing your views with us. I look forward to talking to you a little bit down the road, and maybe you could do us a favor. Maybe Pippa would like to talk to us here on this platform.
Yeah, I'll talk to her. Yeah.
Okay, and maybe we could have you both together sometime.
Yeah. Well, we do joint things. Anyway, great to talk to you.
Yeah, I enjoyed. I'm glad our paths crossed on Twitter, Harold. Really,
it's strange. I mean, Twitter was, I just fell into Twitter at the time, and I was having cancer treatment, and I was physically not fit, and so Pippa said, "Why don't you play with Twitter, because you can put out thoughts all day, and that's all I did. I never used it to sell anything,
Right.
but I got sort of interested. Now I've got a following, and I got a huge amount of hits every month now. So,
Well,
so I find it fun, stimulating, and I speak what I think. So nobody's, I have no hidden agenda. So I have fun with it.
Yeah. Well, it does provide a service to get an unbiased opinion for someone that doesn't have. Most people on there are selling something, so you don't have an axe to grind out there,
No.
and the FinTwit universe appreciates that. I know they do, Harold. Thank you so much for being with us today.
Well, great to talk to you.
All right, everyone, that's Harold Malgrim, and I hope you enjoyed the interview. In 10 minutes, you could join the team on the Morning Edge. And remember, don't just count your pips, count your blessings. Adios. Thank you, Lorena, Anthony. Glad you enjoyed Harold. And we'll see you tomorrow. You too, Monica.
Adios.
Adios, Harold.